Hey everyone, welcome back to Corporate Decoder, the place where we take tough corporate documents and make them make sense. And boy oh boy do we have a juicy one. Today, a company is selling shares hand over fist. Let's see if it is a good deal for anyone involved before we dive in if you like decoding corporate filings with us. Make sure you hit that subscribe button and the notification bell so you never miss a new video, and if you want to chat with us and other finance enthusiasts, join our Discord server link in the description below. Alright, so what we have here is a Form 8K filing from a company called BioAge Labs Incorporated. This is basically a report they filed to tell the public about really big events that happen with the company, things that investors need to know right away. The main event here is that BioAge Labs has entered into an agreement to sell a whole bunch of its stock in a public offering. So think of it like the company is saying, we need money, and we're going to sell new pieces of our company to anyone who wants to buy them, and who is helping them sell all these shares. Well, it is some big names in finance: Goldman Sachs, Piper Sandler, and Citigroup. They're acting as the underwriters, which means they're the ones organizing the sale and finding buyers. They are planning to sell 5,897,435 shares of their common stock, which is their basic ownership unit, at a price of $19.50 per share. But here is a little extra kicker. The underwriters also have the option to buy even more shares, up to an additional 884,615 shares within 30 days. This is often done to cover unexpected demand or to help stabilize the stock price right after it starts trading. Now let's talk about the money. BioAge Labs expects to get about $107.6 million from this sale, after they pay all the fees and costs associated with this big sale. This is a significant amount of cash, and companies usually need it for good reasons. So what are they going to do with all this money? Well, they plan to use it to fund their research and development, especially for their product candidates like BGA-102 and other programs. They also mention using it for working capital expansion and paying down debt. This tells us they are investing in their future products and operations. It's good to see they have concrete plans for the cash. This whole deal is expected to wrap up very soon on the 23rd of January, and of course this all depends on everything going smoothly as expected. To go along with this big financial move, they also put out a press release to announce that the offering was priced. That is pretty standard procedure, just to make sure everyone officially knows the details of the deal. Now, a little detail about their stock: you see, it says common stock with a par value of $0.0001 per share. This is incredibly low, and it means that each share has a very tiny official value on paper. It is not uncommon for companies to have very low par values for their common stock, especially after stock splits or to manage accounting in certain ways. And where does this stock trade? Well, it is listed on the Nasdaq Global Select Market. This is one of the major stock exchanges in the US, known for listing a lot of tech and growth companies. An interesting point here is that BioAge Labs has checked the box indicating they are an emerging growth company. This means they are a relatively newer public company, and they can take advantage of certain regulatory benefits and relaxed reporting requirements. This is common for companies at this stage of their growth. Now let's look at the cautionary note. The company is telling everyone that while they are making predictions about the future, they don't promise to update these statements. If things change, this is a standard legal disclaimer to protect themselves. They are saying, look, we're telling you what we think might happen. But if it doesn't, well, that is just how it goes. They list out potential risks like developing and getting approval for their products, sectored clinical trial results, safety concerns, intellectual property issues, and reliance on third-party collaborators. It is a pretty standard laundry list of things that can go wrong for a biotech company. And these are all valid concerns to keep in mind. Now, looking at this filing from a broader perspective, BioAge Labs is clearly in a growth phase. They are raising a substantial amount of money, which they believe they need to push their product candidates forward. This is a sign of ambition and a belief in their pipeline, but it also comes with the inherent risks of a biotech company, especially regarding clinical trial success and regulatory approvals. The fact that they put this offering together with major underwriters like Goldman Sachs is a positive sign. It suggests that these experienced financial institutions see potential value and are willing to put their reputation behind the offering. The $107.6 million they're raising will be crucial for funding their research and development activities, specifically mentioning BGA-102 and other programs. This implies that these are their key assets and investors are betting on their success. However, as the filing points out, the path for biotech companies is fraught with peril. Clinical trial, yours, regulatory hurdles, and competition are all significant risks that could derail even the most promising drug candidates. One key thing to consider is their operational costs as a biotech company, especially one in development. The expenses for research, clinical trials, and manufacturing can be enormous. This cash infusion is likely to cover those costs for a significant period, but it will be important to watch how effectively they deploy this capital and whether it leads to the desired milestones. The filing also mentions that they are an emerging growth company, which means they have some flexibility in reporting, but it also means they might not have the same extensive track record as more established companies. Investors should do their due diligence on the science behind their product candid. 8's and the management team's ability to execute their strategy. Ultimately, this report is about a company taking a calculated risk to fuel its growth. It is a positive step in terms of securing financing, but the real test will be in the successful development and commercialization of their products. The market conditions for this offering seem to be favorable given the underwriters involved, but the long-term success hinges on BioAge Labs delivering on its scientific and clinical promises. Alright, that is our breakdown of BioAge Labs 8. Okay, Filing, what is your take on this stock offering and what they plan to do with the money? Do you think it is a smart move for the company and its investors? Let us know in the comments below. If you found this analysis helpful, give this video a thumbs up and subscribe for more. And don't forget to join our Discord community, linked in the description for more discussions. Thanks for watching, and we'll see you in the next episode.